Hello, this is Josh Belk with the Belk on Business podcast. Hope you're having a wonderful day today. On today's podcast, we're going to pick up on working our way through this series, talking about our mindset as it relates to money. And we started off over the first couple of weeks really trying to talk a lot about our purpose, why we are in business, ultimately where we want to go, and really starting to focus more on the purpose side of our business and really trying to lead with purpose and not just focus on what typically we think about as profitability inside of our business. And if we really truly focus on our purpose, and if we do things the right way, the profit will come. So we're really kind of leading with purpose first over essentially profit first. And we talked a little bit about that over the first couple of weeks, and we had kind of a story that we're kind of working through and talking about as it relates to that. And then last week we started to get a little bit more into the practical, so kind of moving a little bit more from the principles and a little bit of the theoretical into really talking about some of the more practical side as it relates to where should our mindset be as it relates to money. I don't know if it necessarily should is the best term to use here, but really kind of maybe just giving you bring a little bit of awareness as it relates to how we think about cash flow inside of our business. And the same thing is true as it relates to debt. And so the question kind of to lead this podcast is how are we going about using our debt and how are we managing our debt? And so we're going to talk a little bit about that today. So how are we using debt? Now, I'm a believer, don't apologize for that. And one of kind of the baselines as it relates, I think both in personal finance and also I think in business finance as well, is a very simple verse that we see in the book of Proverbs. And the verse simply states that the borrower is servant or slave to the lender. And this is true whether it's personally or it's inside a business. And as I hear sometimes people as they have this conversation with me and they say, well, we're debt free as it relates on the consumer side, and but we think that business debt is okay. And that, of course, that's just a matter of opinion or perspective. But I think really regardless of whether it's personal debt, whether it's business debt, all debt, regardless of whether or not we think in our mindset that it's good debt or it's bad debt, bottom line, it puts us in a position of being a slave or to being a servant. Okay. And I don't mean servant in a good way necessarily. Okay. I'm talking about a servant in a servant's a slave here is something that's going to put us in bondage. And let me explain what this means. We think about on the personal finance end, we think of, going into credit card debt or consumer type debt. That definitely is not good debt. Okay. It's something that essentially we are borrowing from the future so we can have things now. And of course, I understand sometimes there are other types of extenuating circumstances, but many times people just go through and they spend and really kind of like where they're borrowing from the future. They're taking away from their future to buy something now. And that's never a good thing to do inside a business or outside of business. And when we do that, that puts us in a position of slavery, meaning every time I go into work, part of that work day, I'm going to be spending to go and pay off debt that I have. Okay, that means I have no choice. I have to get up and go into work. I have to put in the grind. I have to put in the hustle. And constantly, every day, I'm focusing on this. Pretty much most people, if not all people, think about money many times during the course of the day. And I promise you, if you are in debt, that is something that you're going to think about regardless. And that is essentially putting part of your emotion, part of your day, part of your time, it's putting that in bondage. It is literally putting that in slavery. Now let's transfer that over to the business side. Now you say, well, there's good debt. I borrowed from an investor. I borrowed from a bank as it relates to leveraged property. But guess what? That still means it's going to require me to get up in the morning, go into work, put in the time, put in the effort to make sure that I am bringing in money in order to be able to pay that debt. Meaning it still is going to require me at some point to put in some sort of an effort to be able to pay that down. And it doesn't matter if I'm talking about a debt on a rental property that I'm going through. Well, the tenant is essentially going to be paying off that debt through the rents. Okay, well, guess what? You still have to do the work to make sure that there's a tenant in the property, to make sure that property is maintained, to make sure that it still is going to generate cash flow. So there is still a certain extent of bondage that comes into that type of debt, regardless, even though it's leveraged debt. And I would say that it's debt well used, okay, and it, provided it's properly leveraged, it's properly being used. But bottom line, the principle still holds true. It is still holding you in some position of bondage. So always remember that as it relates to debt. How are we using debt? Now, I think practically speaking, let's talk about this. I think it's very prudent if we have any sort of debt, and this goes beyond just thinking about credit cards or bank debt or lender debt, but it goes well beyond that into other areas as well. We can think about security deposits. So say you're in the business of real estate, you're holding on to somebody else's money for a time. Okay, you've been entrusted with it. We can think of taking on construction loans. Okay, something you're going to spend, probably refinance, and then be able to pay back. But whenever you have these types of monies that are coming in, that essentially you're held in trust with. So it's somebody else's cash. I think very practically speaking, we should have separate bank accounts for that money. So security deposits, for example, we have loans that we're going to be spending on a particular project that should go into a bank account, not mixed together with operations. So I think if we do these types of things to making sure that we're separating literally within our banking structure, those debts, okay, the money that's coming in that essentially either has to be held to be repaid at a future date, or money that's going to be held that I cannot have mixed with our operations, that money should be separate. If we're doing those types of things, it will really help our mindset as it relates to how we go about looking at how we're spending our money. Because if we end up with other people's money mixed in with our operational money, it's going to give us a false sense of security inside of our business. This is more of an emotional thing. Okay, but once again, we're kind of talking a little bit about our mindset. Okay, and emotion plays a huge part of that. So we want to do everything that we can inside of our business to structure it in a way to provide that barrier, provide that wall between the way that we go about spending our operational money and the way that we're handling and managing other people's money. Okay, so first of all, when we're bringing in other people's money, to make sure that that is separated from our operational money and it is managed accordingly. Okay, and so how are we using our debt? How are we managing our debt? So we've taken on the debt. What is our mindset as it relates to how we are managing it? And we know that our business is in trouble in a couple ways, and these are certain areas that you should be looking at probably weekly. Okay, are we able to pay off our credit card balances on a weekly basis? Now, I understand that the credit card bills come in on a monthly cycle, but I think a truly healthy business, a truly profitable business, is one that is going to be able to sit down every week and their AP person, their CFO, their bookkeeper, their controller, whatever you call that person, is able to go and pay that credit card balance off every week. If you have the cash flow, and we talked last week about free operating cash flow, right? If I have that cash flow to be able to pay that off every week, that means my business is probably a lot healthier than if I'm not able to. But I think from a mindset perspective, I think it's a good habit to get into inside of our business. Am I able to pay that off every week? If I'm not able to pay that off every week, okay, now once again, we're going back to what would we think about if this was consumer debt? Okay, it means I'm moving backwards. I'm living paycheck to paycheck. It means that something's not quite right. Okay, either my spending's out of control, there's some sort of a cash flow management issue, whatever the case may be, and you really should dig into that. Okay, but pay those credit card balances off every week. Same thing with lines of credit. If they're operational lines of credit, and so you're borrowing money to be able to pay for operations, that really should be getting paid off on a monthly basis. If you're not able to, if you're borrowing from a line of credit from anywhere else to pay for your operational bills, okay, that means your business is not healthy. Your business is not truly profitable. Your bottom line may show that you're profitable, but you're truly not profitable. You do not have a healthy business. Okay, so make sure that those lines of credit, once again, can be paid off every month. I don't think you're going to realize until you get to the point of paying off those debts to where you're going to be able to look back and realize how much stress that puts you under. Now, I use a lot of data personally to manage stress. And so I use technology. I have wearables that I use. And guess what? I can tell. Literally, the data will literally reflect in many, many different areas as it relates to stress. But I know that when I'm under stress on the business side, that the data tells me and shows me that it affects every aspect of my life. It affects my sleep. It affects everything. So I want to remove that bondage as much as possible. And so if I have debt that I'm not able to manage, it's going to create a lot of stress inside of you as the business owner, and it's going to make things a lot more difficult. It's going to affect your culture. It's going to affect the way that you treat your employees. Think about it if you're married, your marital relationship. If you have a lot of debt, household consumer debt, that's going to affect the that Friday night date night that you go out on, that you got paid that day, and you're sitting there to end up discussing on what bills you pay first and why did you charge this, and it's going to ruin that particular date night experience. Okay, the same thing is true in your business. You come in and you're looking at your team and you're stressed out because debt hasn't been managed well. And now you're getting snippy, you're getting short with your team. That's going to create issues inside of your business. It can be one also that creates a downward spiral. Manage that debt well. So think about it. Are you able to pay those credit card balances off every week? Are you able to pay that operational line of credit off every month if you have to use them? Hopefully your business is healthy enough to where you're not having to use a line of credit for operational expenses. Maybe use it for other areas. Maybe you tap into it to maybe take the next step in scaling or making some sort of an investment into something that's going to pay you back in the short term. That's perfectly okay. But if it's simply you're just taking that debt in to cover payroll, to cover those operational expenses, okay, your business may be in trouble. Next, managing debt. When we're looking at our balance sheet here, and if it's one of those things, if you were in the room with me, I'd kind of create a visual here, but I'm going to kind of talk through this and kind of just try to create this visual inside of your head. So fixed assets, less corresponding depreciation. So you understand if you're looking at your books and you kind of go through and say you have an asset on your books, that asset is going to get depreciated in time. If it's a rental property, if it's a commercial building you hold, whatever the case may be, those assets are going to depreciate over time. So if I take that fixed asset less my depreciation, my normal depreciation, take accelerated depreciation, you'll have a slight modification here. But in a perfect world, it should even be with your accelerated depreciation. Your fixed asset less your depreciation should always be greater than the corresponding debt. So if I take a look at my asset value, which is what I purchased that property for, plus any sort of rehab, any cost that I put into that into that property before that property was essentially able to be used, rented out, occupied, whatever the case may be, that balance there, that amount there should always be greater than any corresponding debt. What happens and where business owners get themselves in trouble is they go through, they buy something, they go through and they rehab it, they refinance it, okay, for a value that's greater than the amount that they put into it, or even at that equal amount to maybe pay off a construction loan or a private investor. Then they go through and they begin to pull that cash out of it. And then they go through and either pull it out to pay for operations or pay themselves personally. It's no different than going and using a credit card. Okay, you're going through and now at this point, your property is over leveraged. Okay, that's going to make your balance sheet look bad. It's going to put additional stress on you as the lender. And ultimately, what I'm doing is I'm borrowing from the future profits from that particular piece of property now. And it will create all kinds of problems inside of your business. And I've seen businesses do this over and over and over again. They go through and they refinance. Instead of going through and properly using that refinance money, they pull some of that money out of the business, either personally or in operations. And that is a sign of trouble. Okay, so simply take a look at a fixed asset less your depreciation, silo it. Is that greater than the corresponding debt? Don't ever get into loan to where it is not an amortizing loan. If you're getting into interest-only loans, okay, that value of that property is going to drop below the corresponding loan value on that property, and it's going to put you in a negative equity position. It creates tax issues. It creates finance issues inside of your business. Just be aware of that. Next, once again, mindset as it relates to how are we managing debt? You as the owner, have you put money into the business and are you not able to pay yourself any of it back yet? So if my business is truly healthy and profitable, I'm going to be able to begin to pay myself if I choose to as a business owner. You may choose not to, but is my business able to pay me back? Okay, if I have a business that I had to dump a ton of money into and this thing begins to roll and I'm not able to start paying myself back, okay, if I don't have the right mindset toward it, it's really going to create resentment that the business owner has toward its own business and toward the team members. Okay, and it's going to be one of those things that you're looking at this thing like this business is not serving me. I had to put a bunch of money into it. I'm not able to pay myself back. I bootstrap myself, that type of thing. And it's going to really put you in a position just like an employee that has put themselves in a position where they have all kinds of debt. They're not going to perform as well inside of work. And the same thing is going to be true with you as the business owner. You've essentially now put yourself into a position of being the lender. Your business is the borrower. And now you've created a slave. Your business has now become a slave to you. Okay, it should be serving you, not put into a position to where it puts the business in a position of slavery. So another metric we can look at, a sign of health of a business, is are you able to pay yourself back any money that you put, any capital infusion or money that you've lent to the business? And then lastly, as it relates to our mindset, as it relates to how we manage debt, do we have unsecured loans for operations that have not been repaid, including seed money from family, friends, etc.? So you look at, so this goes beyond, we talked about any sort of credit card should be paid hopefully weekly. Those lines of credit, operational lines of credit, any other unsecured loan should be paid in full monthly, anything as it relates to our operating money. And then also taking the next step as it relates to money that we may have put them into the business, and then also other families, friends, people around us that have put money inside of the business. Are we able to repay them? Is there a plan that we are fully implemented, that is paying back friends, family, ourselves, etc.? And so debt, it's going to bootstrap us. It's going to put us in a position of slavery. So we want to make sure that we're addressing it and in being aggressive in addressing it. So essentially we can get our businesses, ourselves out of that position of slavery, and then have a business that truly is healthy, one that can scale, one eventually that we can either pass on, sell, etc. at some point in the future. If not, if we aren't doing those types of things, then eventually we'll see our business kind of work in a way to where it is going to struggle in perpetuity or essentially fail if we do not have the right mindset as it relates to debt. Once again, this is Josh Belk with the Belk on Business podcast. I appreciate you taking a few moments to listen in today. If you haven't already, please consider subscribing. If you have any sort of comments or feedback, would love to hear it. Have a wonderful day.